Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Matt Peron, Director of Research over at Janus Henderson. Matt, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. Thanks for having me.
All right, you got it. And Janus Henderson just released its edition of the Global Dividend Index. Can you tell me about some of the U.S. specific findings for this quarter?
Yeah, sure. So fourth quarter 2021, which is what our report covers, was a very strong quarter. So dividends up about 11% on the quarter, wrapping up a pretty good year of 2021, which was up about 4 or 5%, depending how you count, on dividends for the year.
Have any specific sectors stood out based on their dividend growth over the past year?
Yeah, the financial sector was probably the strongest in terms of growth, and that's because they restored most of their dividends that they had to cut during 2020, either mandated or decided to cut out of prudence. So they came roaring back, if you will, and so financials were quite strong. Healthcare was also strong in 2021, but I would call out the technology sector as just a locomotive. For the past 10 years, it's just been the biggest driver of dividends, the biggest dividend payers there, et cetera. So even though tech didn't grow, it's really because they've been a big grower for years now.
And Matt, so let's think about the dividend environment moving forward. We know we're coming into rising interest rates. We know inflation is an issue. We know it's still a challenge to generate yield here. So what do you expect for dividends as we move forward through 2022?
So in general, we expect dividends to grow with earnings in 2022. So if we back up, what generally happens is payout ratios at companies generally stay stable. They pay out 70% of their earnings to dividends, or whatever the number would be, varies by sector. And so in general, when earnings go up, dividends will go up concomitantly. I would say that during the pandemic, what happened was that buybacks were cut first, then dividends were cut, which is why the US didn't really see much of a pause in dividend paying or a decline versus the rest of the world, who had to cut dividends significantly. Buybacks came back in 2021, dividends came back in 2021. We expect now that we're in a more stable environment for dividends to grow with earnings, which is just under 10% probably.
And what about buybacks?
Well, buybacks are the first lever that U.S. companies choose to adapt to the current environment. So as I mentioned, buybacks were cut significantly in 2020, and they came back first in 2021, and then dividend increases were put on top of that when they felt comfortable that their capital allocation policies were optimal for the new environment.
All right, Matt, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.